Investors and traders, welcome to the channel Market Chart Pattern. Today is 19th of January 2024 and I hope everyone is having a great day. In this video we are going to take a look at the key US stock indices, and we will also take a look at the key markets. We'll take a look at the bond markets, the dollar, key currency pairs, gold, brief look at the energy markets, of course the key US stock indices, and today has been a fantastic price action worth talking about, and a brief look at the Bitcoin. And as always, this video is for educational purposes only and it is not a financial advice. So just before we begin to dive into the key markets, just one thing about the model that we have been following for the timing. We were looking for per hour timing per the low to low cycle of 54 days, a low to come in around the 54 trading days. And did we get that? And today has been a fantastic rally. Wow, that's amazing. Okay, so we'll just have a brief look at the key markets, and then we'll begin to talk more in depth about the stock market. So bonds were a little bit stronger today. The 10-year treasury note was up by 0.04%, but it is really the 30-year long bond futures which is really we need to take a deeper look at, and I will show you the pattern that we are watching. We believe that this market is getting close to an important low, a key level that we should be watching, and if the bonds put in a good low, that should be good news for the stock market as well. The dollar was a little bit weaker today, lost 0.24 percentage points, and of course when the dollar is weaker, the euro USD is going to be a little bit stronger. Now the very interesting one is actually the Japanese yen, the USD JPY currency pair. As you know that the Japanese yen had been weakening a lot against the US dollar, but today we had a price action which was towards the end of the trading day was pretty much unchanged. So this is something which we are watching. In my opinion, it was just flat, but we are watching this really carefully. There was a trading range, but it closed flat, and what it is actually signifying is that the strength that was coming in the US dollar against this currency pair, meaning Japanese yen, it has been abating, so it's worth paying attention to. And the British pound against the US dollar was also flat. Gold, interestingly, put in about $6.7. It was a little bit stronger. The interesting part is that on the other hand, silver was not as strong. Now the silver market is smaller compared to the gold market. Gold is also a decent sized market. It's not as big as the bond market, for example, or even the stock indices, but the silver market is even smaller, and what we have seen is not much demand coming for silver. So it is actually weaker than the gold. Crude oil and natural gas both actually closed in the red territory. Crude lost about 0.57 percentage points per barrel, percentage points, and a 0.42 per barrel. And the natural gas is where the volatility has been recently. It lost 7.18 percentage points. And the US stock indices, all of them in green today. What a fantastic sight, and some really interesting news, and that is the S&P 500 index on cash basis made a new all-time high. That's great for the index, and per our analysis we have been actually watching this and waiting for this, and we have a higher level which we'll take a look at the chart. Also per the timing, as I mentioned in the Dow Jones, we were looking for a 54-day low to low trading low to come in, which did, and in fact Dow was higher by about 400 points at the close of the day. And even the Russell 2000 did put in a good performance. It was nearly up by 1 percentage point, but of course the winner has been the NASDAQ E-mini futures, which were up about 2%. Finally, the Bitcoin also caught a bid, and by the time I was recording this video, it was up by 295 points, and Ethereum has also been doing better today, and 16.1 points higher. Okay, so we'll begin to take a look at some of these individual markets. I'm going to go and straight away take a look at the 30-year long bond futures chart. Here we go. Okay, so what we are looking at this market is it has been actually coming down, and I'm not going to go into the details, but we have spoken about these levels before, and what we are now watching for is this 118 and 28 level, and also maybe roughly we can call it 119 even, and also we have this potential one-to-one price projection and ABCD pattern formation. So we are waiting for this. Here we go. When I project it, so this is the point. I'm going to highlight it like this. This is the level that we are really very carefully watching for. This should potentially be a pretty strong support in this market, and if this support holds, then that's gonna be pretty good news for interest rates, because when the bond prices move higher, the interest rates actually fall, and that should help a number of markets, and the stocks being one of them, in my opinion. So again, 119 is what we are watching for. Maybe it could get there sometime next week. There is also a possibility, because today the bonds were closed positive. Maybe today was also an important day as well, but from a price perspective, this is what we're looking for, and we'll be watching this market really carefully. And now let's quickly move to the dollar. We are looking at the dollar index. Dollar is finding resistance from the 78.6% Fibonacci retracement and from an inside bar, but you look at this, it has actually broken out of a channel, and there's a possibility that some strength can in the dollar can actually come in, and the dollar could make a move towards the 104 level. So what we are watching, should it begin to fail around the 78.6% Fibonacci retracement level of this swing, it means that dollar is actually getting fairly weak, and we'll be looking at the retouch of this channel formation here, and of course we'll have some Fibonacci levels to look at as well. Quickly take a look at the USD Japanese yen. Here we go. And look, it's just going sideways within the 61.8% and 78.6% Fibonacci retracements. Okay, let's have a look at the gold. This is the daily chart of COMEX gold. This is the futures chart, and what we were looking for was perhaps the market could come down as low as 1988 because of this pattern formation, which is a pretty strong support around here. But what we have seen in terms of price action over the course of last two trading days in gold, the 2012 level, which is 78.6% Fibonacci retracement, might actually be a good level of support as well. So we are waiting for further confirmation in this, and gold is actually moving in its positive seasonals as well. So from a seasonality perspective, there is strength or expected support for this market. Now we'll go and have a look at the natural gas. Here we go. Look at this chart. It's just been right from the 78.6% Fibonacci retracement when it had these failures here, and on Tuesday, so last week, this week had actually been a shorter week because of the MLK holiday. Monday was a holiday, markets were closed. And what we are looking at is basically that was really a pretty nasty price action. I think that day the market lost about 15%, and that momentum to the downside has been actually carrying on, and we are approaching 78.6% Fibonacci retracement, but because of this a really bearish momentum over the course of past trading week, there's a chance we might actually be looking at one-to-one price projection, which could in fact take this market lower. So we'll be watching out for this price action in this market. Finally, we'll begin to move and take a look at the key US stock indices. I am going to start with the Dow Jones Industrial. What we are looking at is the Dow Jones Industrial Cash Market. This is the daily chart. I am not going to go into too much details of the cycles that we see here. Maybe in the weekend review video, I might actually go in a little bit more detail. But just to show you, this is how we were working out the cycles operating in the market, and we had a cycle of about 54 trading days coming in which came in on the 17th of January. And as always with these cycles, they are never really precise. We are always taking plus or -2 trading days here and there from the expected kind of date that we are looking at. And what we have seen is 17th of January being a kind of a low coming in, and yesterday 18th price actually challenged those lows, but price rejected lower prices and closed higher. And today we had a fantastic, nearly about a 400 point move by the close in the Dow Jones E-mini futures market. So this is really good news. Now this means that we have a kind of a framework to work with, and also what we are looking at in terms of the next key date. We have a key date coming in around 27th of February. So we'll have to wait and watch and see what might be the significance for this date. But we have some timing coming in, and we'll be paying close attention to when we get around close to that date. Now let's go and have a look at the S&P 500 cash market. This is the daily chart. Just want to reiterate this fact. Look at this date. It was 4th of January 2022, so it's been a little over 2 years. This was the high, all-time high in this market. No longer, as today we just broke out of it. And what do we have above this? Above this we just have air. This thing has just got air above it now. In terms of our levels now, the key level that we are watching for is the 49.10, roughly speaking. Around that level is the kind of next target where this market is likely going to go on target. So anywhere 4900 to 49.10 is the level we're watching for, and that's going to be the completion of this big ABCD price pattern. And of course also we have this 1.618 Fibonacci expansion of this BC swing coming here. So this is something we're watching. Now let's take a look at the NASDAQ 100. So here we go. Wow, look at this move. What a fantastic move. And we were looking for the 17,250, which was the 1.618 expansion, and it just went through that level as if it didn't exist. So this is the level of strength in this market. So again, in the weekend review we'll be doing further analysis. We'll have further levels for the market which we'll like to watch, and of course we'll also take a look at the longer term weekly charts. Now let's take a quick look at the Dow Jones E-mini futures. Here we go. So this is the market in which we have this completed ABCD pattern, and where the market is now, it's just approached this finally the D point here. This is the and that's where it found a little bit of resistance or pull back from. But again, what we are looking at is a market which is in a trading range in my opinion, and this is the bottom of the range around 37,300 or 37,400 level, roughly speaking, and the market has gone and probed the upper end or the high of the trading range. And with this kind of strength, the chances are the momentum or the inertia will keep on working in favor of the direction, which is to the upside, and most likely there is further upside to be expected in this market as well. Russell 2000, this is the daily chart of the E-mini Russell 2000 futures. We had been looking at this 38.2% Fibonacci retracement, and we also had the 1.272 expansion of this swing here. I've not labeled this because it's not really an ABC price pattern because it did not complete as much further down, but we did have this expansion. And here the market actually made a low between the 1.272 and 1.618 expansion of this swing after finding great deal of resistance at the 38.2% Fibonacci retracement of this swing high to this swing low around here. And what we're looking at now is that market has found good support around these 1920, which is the 38.2% Fibonacci retracement as well. And this is good to see buying coming in this market, because small caps had been the ones which were actually moving lower a lot. For just for this one, I would like to also show you the weekly chart, just to reiterate that we just have been in a very long trading range, and what we have been doing is basically testing the bottom of the range, top of the range, bottom of the range, top of the range, somewhere in the middle, top of the range, bottom of the range, finally an attempt to break out and then move back into the range. Probably it needs another stronger push to the upside to be finally be able to actually take the swing high out, and that's gonna be a pretty bullish move to the upside should that happen. Okay, finally, last but not least, Bitcoin. This is the daily chart of the Bitcoin. This is spot market, and here the Bitcoin is actually reaching a 38.2% Fibonacci retracement, which should provide some support. But the interesting thing about this market has been a look to the left. It found resistance from this structure here, which was put in place around 27th of March 2022, and also this high came in when finally the Bitcoin ETFs were approved. A number of them, some of them had already actually existed, as some had been there, which were ETFs of the futures for Bitcoin, and rather it could have been perceived as a bullish news, but the price action has been otherwise, and also the price is below the 20-day moving average. So really watching this 39,800 level, roughly speaking, to see how the market is going to react off this level. At the moment, I don't have any other pattern formation here, so we just have this Fibonacci ratio as a potential support. Whether it will hold the market or not, I do not know, but if it does provide a good amount of support, then in bull markets or strong trending markets, 38.2% is a pretty good support or resistance depending on the direction of the market, and a move off this level could be pretty strong. So again, watching this level. Thank you very much for watching the video, and I wish you good luck and good trading and a great weekend, and watch out for the weekend review, and I will actually go in more detail about this chart that we are looking at, and the low to low cycle that I'm talking about. Thank you very much. Good luck. Good trading.